What is going on, guys? Welcome on into 2023, the first day that the market is open for business. And while it has been a chop fest and it continues to be a chop fest on the S&P, we got to look to individual stocks such as, in this example, Apple, for some of those cleaner, trendier moves. And Apple today after the first 15, 20 minutes, really nice breakdown, and then just kind of in this consolidation, we'll see if it wants to head lower or if it wants to kind of give us something back up to the upside into the close. But it's been a really interesting first day, and it kind of left off, or we kind of picked up right where we left off if we jump over to the S&P 500, which, funny enough, last night, futures gap up, give it all back, go red while we were on the live stream. Then throughout the rest of the overnight, actually push higher. The S&P at one point was up here over 386 on SPY, and then proceeds to give it all back and then fall down to 378. But what are we finding is that it bounces at 378, and it just could not get any continuation to the upside. And you want downside, we're just not getting that either. We're just in this like range. It's a chop fest. It's what it is. So that's at least what we got today. However, right inside of individual names, you got some big moves despite the S&P choppiness. Tesla down 12%. I didn't think that the news. I think they didn't meet on delivery numbers, or they had they came in lower than expected originally. Whatever. I didn't think some of that news would matter too much. Well, it seems like this market doesn't care, and it sent down to a new low on. Well, I guess the new low on the year is. Any stock that was down today hit a new low on the year, but Tesla hit a new low from the past 12 plus months now. Today down to about just under 105, 104.64. It looks like Tesla is setting up for a sub $100 flush, and that's just what it seems like we're headed to. We'll see if we get it, but $100 will be the next key spot to watch. If we can't hold that, then probably going sub 100 down to the 80s. Some gaps to fill down in the 80s, so we'll see if we get that on Tesla. But still kind of a choppy session or a choppy day. Outside of that, we look across the watch list. Let me see if I can bring this up so you guys can see the ticker symbol that we're talking about, the price that it's at. But if I go through the watch list, here's some of the large caps I've been following. We got some good greens and you got some pretty nasty reds. It's just a choppy, mixed bag, You look around, Enphase is down a good bit, Tesla's down a good bit, Apple's down a good bit, NVIDIA, AMD. Amazon's up 2.3%. So Amazon's, having a really strong, look at Amazon. Despite what SPY's doing, Amazon's like, screw you, I'm going to try to hit a high of the day here to the close. Why? I mean, it's just doing its own thing. Microsoft is flat. Google is actually up. Meta, check this out. Meta, very strong trend day. Meta actually looks really good. And it's actually, if you take a look at the chart, it gapped up, so I'm concerned about a potential backfill down to like 120. But this is breaking up over the highs of the past couple of months. Might be on a little bit of a line towards that, mid 130s. Next key resistance spot on Meta to watch. So pretty strong. It's kind of interesting. It's like a mixed bag. It's choppy. It's not like we can find one specific sector and say, oh yeah, it's pretty obvious. It's just, a risk on day, or it's a risk off day, or it's choppy. You go to the risk on names. Shopify is up 30%. Shopify's chart looks the best out of a lot of these in terms of just how it held up the past couple of months. So I don't dislike that play at all. But a lot of other ones are down today, at least that I've been following. Not too bad. Rivian's down a lot, probably with Tesla. Affirm ARK is down. ARK is down 2.3, but that's probably because of Tesla. A big part because of Tesla. For why Kathy Wood's feeling the heat. Natural gas is getting crushed, dude. I'm going to swing it, I think. I'm going to swing next, or 3-week contracts. So contracts out 3 weeks to the upside for a potential gap fill right here. But it's a risky play. So I'm not, I would be cautious upon that. But I'm swinging some Boyle just because Boyle hit a new low. It doesn't really matter. It's leverage. So when natural gas is weak, it's going to get crushed, which is fine. But I'm looking for this to bounce back on this gap fill. It's very oversold. Now, of course, it could be wrong. And I think the problem with natural gas is that I wanted to be short natural gas as it cracked down below 525. But I didn't get the entry that I wanted to at the time. And now it's way too oversold for me to want to short this now. So there's no chance in hell I'm going to short this thing now. So looking for at least a gap fill back up on nat gas up to about 440 or 435 to 440. It's currently at 393 right now. And we'll see if we get that in the coming days and weeks. Ideally, it happens this week or in this next 2 weeks, but we'll see. That's something that I'd be watching for a potential, short or re-short entry. But I don't know. That just came down so hard, so fast. I think a lot of people are bagged in terms of like a lot of people who are buying natural gas who bought the dips, along the way the past few months are underwater, and it's going to be tough to turn that tide around. So we'll see. But you're going to get some pretty volatile action. It seems like it's down 11% today, so it's freaking a ton for nat gas. It's not even a leverage. If you look at Boyle, it's down 20% or something like that. So we'll see. Yeah, I was reading up a little bit more into nat gas like a little bit ago. I'm playing small, and we shall see. Ideally, it's coming down to some of this support in the upper threes, 375-ish. We'll see how it handles that. Flip us starting the new year right with that pizza play, right? What is it, Papa John's? Let me find the ticker. PZZA. Boom. This was a nice one. I mean, I saw it at $80 and was like, oh, because I had an alert set for $80. And I was like, okay, I'll just kind of keep an eye at it. And next thing I looked back and I'm like, oh, it's at 78 or it's at 79. That was quick. That thing dropped fast. It doesn't trade a ton of volume on the shares. Not as clean of a chart on the shares as you would like to see, let's say with like a Tesla or an Apple or whatever, but still dropped a nice $1 and it hit a nice bottom here at like almost touched $77. That thing came down a lot. It came down to that. That would honestly, that's what I was looking to see if it would. If I was going to trade it, it would be like a target down towards that 77, which already hit today. So that was quick, very quick. It's interesting. Like if you look across the board, you got SPY, you've got Qs, IWM, DIA. DIA is holding up the best. It's still red, but it's down 0.3%, whereas IWM, Qs, they're all down about the same, 0.7-ish. SPY down about 0.5-ish right now. But I think the big notable pressure on the S&P is going to be if this Apple pulls what Tesla, or pulls even just some sort of what Tesla pulled the past like month or so, which it seems weak. The charts look kind of similar. They look eerily kind of similar if you go back to where Tesla was, about a month ago, to where Apple is kind of now. This is, I think, what the biggest pressure on the market's going to be. However, you're coming down to some of the lows of May 2021 right here, low 120s on Apple. So we'll see what Apple wants to do. But it's chilling right now in this kind of consolidation in this, like, what is that? 125 trying to hold us a resistance, 125.25 roughly, and then 124.25 as support. So it's in between that. A break of either one of those into the close probably gets a little bit of a push. We'll see which way we get. Pisa and Q short. Bubbler energy drink. I have not. This is what I have. Is a the sparkling ice. I've mentioned these in the past. These are like my favorite in terms of like it's only like 60 or 70 milligrams caffeine. Something, nothing crazy. Yeah, 70 milligrams caffeine. Sure, there's a bunch of artificial sweeteners. It's only 5 calories, so it's like all fake sweeteners. It tastes really sweet, but apparently it's got decent stuff and it tastes good. I'm not a coffee guy, so this tastes good, and I drink sometimes I'll have just like a can in the morning. Sometimes I'll have half. So this is like a half a can that I had left over from earlier. But I don't know. I try to keep the caffeine, especially as of late. I've been looking more into like trying to improve my sleep quality. Especially if you're not going to get 8 hours, like if I'm not going to be able to get 8 hours, like I got to try to do everything I can to improve that. And one of the things has been, I've been really bad about caffeine towards the later half of the day. And apparently the half-life of caffeine and whatnot, it still will hang around if you drink it within a couple hours of bedtime. So you really want to keep it to like 8+ hours prior to bedtime. So like, I don't want to push it past like, 3-4 o'clock in the afternoon. Like I don't want to be drinking a bunch of caffeine. So trying to keep it to a minimum. This is like this is like the last little bit. It's only like 35 milligrams left of that can if I have half a can. But I keep the intake pretty low. Even though I do have pre-workouts and stuff, I try to keep it pretty low, generally speaking. I'm not like a caffeine addict, which I know I used to, back in the day, I'd be ripping like a full 2 scoops of pre-workout that had like 100 plus milligrams of caffeine per scoop at like 6 p.m., and hit the gym and then go to bed at like 11. Those are the days. Bubbler, only 60 milligrams caffeine. Okay, cool. No artificial dyes or sweeteners. I gotta look into that then. Gotta look into that because I'm sure, like, I haven't dove too deep into like the artificial crap. I'm sure it's not good for you. Like, you can kind of just assume it's not good for you. My biggest thing has always been like, oh, like if this doesn't have calories, it's great. Like, yeah, sure, it doesn't have calories, and like, yeah, it's not going to be. I guess if you're trying to lose weight, which I'm not really trying to lose weight or anything right now, but if you're trying to lose weight, sure, you want to cut the calories, and artificial sweeteners could be your friend, but they're probably not healthy when you think about the longevity of your life. Probably. As I take another sip. So I think what it seems like we're waiting on is this crap right here. FOMC minutes is tomorrow at 2 p.m. Maybe we get a better direction there. We're skewed towards the low end of the range, right? So we're down towards the low end of the range. That's if we had to pick a direction. Right now, we were closer to breaking the lows than pushing up. And it seems like every time we get up to the upside, we get rejected pretty hard. So I would say that market kind of, with Apple weakness and Tesla looking terrible, I would say the market probably wants to go lower. Probably. But I'm not going to be betting on SPY puts overnight at this point because we've seen just how the past couple of weeks or past like 2 weeks have been. The direction of one day doesn't mean jack shit for the next day. We're going the complete opposite direction. Fund manager moving around, shifting new sectors. Yeah. Financial sector is strong. So let's see. Yeah, it is. It's up. It's green. Believe it or not, XLF is green. Interesting. Let's check in on JP Morgan. How's JPM looking? That's up to. Check this chart out. Chart looks pretty decent, honestly. It was higher this morning, obviously, when the market was up, but it looks past like, a couple of sessions has been strong on JPM, man. It has. Oh, yeah, the 10-year came down a bit. I mean, last night we were looking at this and it was at like 3.85% roughly. Now it came down to 3.72. Now it's back up to 3.79. Inched back up a little bit today, so it's kind of jockeying around a little bit, but couldn't break over that 3.9%. So we'll see what happens there. It seems like that's going to be, if that holds, that's pretty interesting to watch on the 10-year. But I'll be watching that spot as kind of like my line in the sand of like, if we start pushing that, then 4, then we'll have to be keeping a closer eye on it. But until then, I'm not really super concerned about it. I'll keep an eye on it in the back end, but put call ratio, I essentially tossed out the window after reading that article from CBOE. Not tossed completely, but it's like you got to look at the deeper storyline there. So I'm not really a huge fan. Here's DXY. I got some alerts set on DXY because last night, it's funny, we were looking at this and we're like, oh, this doesn't look good at all. This looks like it's going to be weak. It held that exact low we were looking for it to hold or for it to break down for a further downside. It held that exact spot and then pushed right back up and came right back like the top of the range of the past like 2 weeks, 3 weeks almost now. And it's right back there. So we're like skewed towards the higher end of the range here. A break here probably helps push stocks lower, but we have yet to get that. So the question is, do we get that in the coming days? And we might be waiting, to be honest, off of Powell not Powell, but the Fed minutes tomorrow. As stupid as that stuff is, I mean, I don't want to say it's stupid because it can certainly move the markets, but it's like, come on. There's not going to be much new crap in there. If anything, I think the surprise is not going to be scary for the stock market. The surprise is probably going to be, almost bullish if you think about it from a rate perspective, if anything. But who knows what they say? That could be where people are waiting on that for tomorrow. So we'll see. Keep an eye on that closely into tomorrow, and that's like the biggest story, I guess, for tomorrow of ISM manufacturing. We don't have any pre-market news. We just have some 10 a.m. Eastern, so 30 minutes after the open. Be careful because there's some news comes out, and then we got some time until 2 p.m. Eastern when the next big hit comes, and hopefully by then we got a better sense of direction. Hopefully we have a trend day, or at least at that point the market can close above or below one of these levels and give us some sort of sense of direction. Apple 120. Yeah, I mean, it looks weak as hell. It looks weak as hell for right now. And today's down 4%. That does not bode too nicely. That move is pretty bad too. If you look at the daily chart on Apple, that's a pretty big bearish engulfing on this guy. So you'd look at some of these charts and you're like, yeah, these don't look great. It depends on what you're looking at, though. It's kind of an interesting time, which I think is kind of cool, because it's not like everything is just playing with SPY. There was a period of time last year where I think we could pretty much safely say that it didn't really matter what was going on, inside of these individual names. Selectively it did, but for the most part, it was like, what is SPY going to do today? What's the overall market going to do? And that is where we got to be looking for direction across pretty much everything. It seems like we're kind of losing that a little bit now and got better, I guess, stock picking environment in terms of certain sectors holding up better and certain stocks doing better or worse. So that's a bearish engulfing for now on the daily. It looks like it's going to hold. I don't think Apple's going to bounce back, $5 into the close. So that bearish engulfing should hold into the end of the day there. What's SPY's daily candle looking like? Let's see. Just like chop, man. Came down to 378. But just could not break below. So you got some really good buyers down there in the upper 370s on SPY. Just keep holding this thing afloat. Dow, same kind of choppiness. IWM. That IWM, we look at that 175. It got way above that this morning, then fell below. So I didn't have a clean look at it there. QQQ, off the opening gap up, would have been a nice gap, trade back to the downside to fill the gap. But it fell in support and bounced at the exact same spot that we bounced on Thursday and Friday on the Qs, and even back on the 22nd. So it's been finding support here at like 262 every time on the Qs. SPY is pushing 381 now into the end of the day, at least a little bit. See if that can hold. Yeah, it was kind of a little bit of a bull flag there, looks like, almost. Off that low. A little bit. What do you have? You had a big move off the lows, or pretty close to the lows. Technically held a higher low right here. Then you had that 2-candle push to the upside on the 5-minute. And then you had a nice little consolidation phase. And now you're trying to break that to the upside, and it's sending a little bit to the upside. Let me put that VWAP back on there. I just haven't. I took it off for some reason yesterday, and I didn't put it back on. Yeah, it's breaking VWAP now. Or it's trying to, at least. On SPY. But yeah, it's in the kind of the middle of the range. Natural gas. Yeah, it's been really volatile, but it's an interesting spot right now. Because it's funny how natural gas, I think that a lot of people would have thought that natural gas was going to go way, way higher. Just like oil, go back a few months and look where it is. It's done the complete opposite. It's gone off a cliff. WBA earnings Thursday, huge spike in RSV, code flu, cases. Inverse head and shoulders there. Let's check that out. Walgreens. Oh, yeah. I mean, you got a nice 42 to break that for more upside. And if it holds this like 36, I like that area. That doesn't look too shabby. That area looks decent. Earnings, though, of course, the key for the next leg, right? And if you get a good earnings off of that, too, you can have a nice push and eventually pop that 42 and have a nice move to the upside in the near term on Walgreens. UPST lost almost 2%. I was looking at it if we had a risk on day. I'm not in UPST. Let's find it. It was up. I think everything was up early and then proceeded to give it back. To be honest, it's not that bad of a day as it could be. If you look at that. Yeah, it didn't go to new lows, and resistance level right here. Got close to that target of $14. Hit up to 1380. But I didn't really care for it, especially after I saw the market start to come down after the first 15 minutes of the day. I was like, okay, well, who cares? Let it do its thing. The biggest thing for me was JSPR this morning. Where is it? JSPR. It's up. It's still up 560%. Still looking decent. I had an average at 50 cents on, I think 500 or 600 shares. I don't even know. Nothing crazy. A couple $100. That's been the sizing that I've just been feeling pretty safe with on these small caps. And it was up immediately up 100% this morning off the initial. They had a PR, positive phase 1 or 2 data, 100%. And then it went higher. I think I let my last sell hit on one of the gap ups up to 233. After the second halt, that last sell filled, and I was like, I'm not going to hold this anymore. If they want to keep trading this thing higher, it's fine. Momentum traders can take advantage of that if they want to, but the trade for me is over. This is a killer play, and it did its job. So that was great. That setup though is working really nice in terms of scanning for these things that are being pushed down to new lows, getting manipulated, having some super high relative volume. And then give it a week or two. They are not all, but they have been running. They've been running these plays, these small caps like left and right after dropping them down to new lows and essentially loading the hell out of them. LHDX, another one we looked at on the streams. I wasn't in this one, but this is another one that popped today. 400%. It's actually, maybe it was up over 5 or 6 at one point as well. 400%. Insane. And the same thing. This was on our scans because there were some crazy, loading set. Like there was some crazy high volume that we were seeing the past couple of days as they annihilated this thing down to new lows. Like look at this volume. If you just exclude today, here the volume candles are pretty large, but they were like there was nothing here. Like the volume was non-existent until December, and then it really picked up the last 2 weeks, and then of course today is the day that they run it. The thing is, when you look at this type of stuff, and I was mentioning this, I think somewhere, how this stuff tends to work. What do they do? How does this work, right? So, if these things get manipulated, they get sent to the downside, and they kind of pull them down. They hit stop losses. They have an all-you-can-eat buffet for whoever whatever big money, whatever fund, whoever is manipulating this crap wants to buy. They have the opportunity to just take anyone's shares, right? And then what they're doing is when the thing goes up 100, 200, 300%, right? They're absolutely unloading and there's unlimited liquidity because now they've kind of just manipulated things to grab as many shares over time as they can. But now as it gets a PR and it goes up 100%, it starts hitting scanners and small cap momentum traders are coming in. Some who know what they're doing can make a lot of money off that. Most don't. And so momentum traders come in, they try to trade those things higher, or they're shorting it, or they're going long, whatever they're doing. And the big money who is loading this thing the past 2 weeks is just making their exit. They're just unloading shares up 100, 200, 300%. That's what's happening. So I'm sure some maybe hold for more, whatever, but the reality is they're just dumping this crap into everyone's face. So if you want to play it, that's fine. You just have to have a strategy and know how to play these things off of day trades and off momentum, which I'm not a fan of. It's, to me, in my experience, it was so much choppier than how large caps trade. There's still choppiness there, but I would much prefer, watching Apple and, whatever, Amazon and whatever large caps versus watching a freaking 5 million float penny stock that's fluctuating 20% in a 5-minute candle, halting up, halting down, could throw an offering at you while you're in the trade. Like there's so many things that can go wrong at any time on any trade for sure. But in small caps, when you're playing these things as they're up 400%, there's so many things that could go wrong. It's just not worth it. So that's what I think is, that's why I prefer the swing trade of it. But of course, this is something that doesn't work all the time. So it's not a year-round, strategy. It tends to work towards the end of the year and then towards the beginning of the year. And then from there, you kind of have to go and judge based off what we're seeing. So if all of a sudden, we're not seeing these types of moves anymore, then it's not really going to be working, right? If we're still seeing a pretty hot small cap environment, whereas we're seeing multiple 100, 200, 500% runners in a week, that's great. Market's still pretty hot. And if we're looking for the same patterns in other stocks, then yeah, it's still a valid idea. But you just have to play it in a different way where if you're holding these things and you're going to risk 25, 30% because of how volatile they are, you hit a 400%er or you hit a 200%er, right? It makes it so worthwhile. So you don't have to have a 80% win rate to be good on this type of stuff. So when it's hot and it's a lot of fun. But it is there is a lot more risk associated, I think, especially when you're swinging, holding overnight. But that's where it comes down to researching the companies, making sure they've got cash and they're not just going to zero, right? Which ultimately a lot of them will, and a lot of them will end up going to new lows. And so you got to be careful with that at the end of the day. Scalp long on Tesla at one point for a small gain. Small gain. Where is Tesla chilling at now? Down 13%. My goodness. It looks like it's trying to, well, it tried to get to VWAP and then it's rejecting a little bit here. But that move, when it was at 105, man, that thing is, talk about oversold, right? That's getting down there. Contracts are cheap too. Ivy shouldn't crush you too bad if you got some time. Small lotto on WBA. XLE tanking. Yeah. If you jump down to oil is down 4% today, 4.2% right now in oil. Here's oil's daily chart. No, this is the 5-minute chart. Sorry, I'm going to go to the daily chart. Here's oil's daily. You know, pretty much just playing the game of lower highs, lower highs, lower highs, right? So right now, oil needs to get above 83, which it's not able to do so far, and now it's back down. It tried to get up to 82 almost today, then it rejected hard, and it does not look too strong. So if you ask me where the potential opportunity is for the next couple of days, especially if the market's weak, ExxonMobil puts could be a play. XLE puts, if oil stays weak, could be an opportunity in the coming sessions. ExxonMobil, it's an interesting space because honestly, XLE too, because yes, you can look at oil as a pretty big driver of a lot of those stocks. Yes. But at the same time, you got to be careful because it's not a perfect driver, not a perfect correlation where it's like, oh, if oil's down, then all these stocks will be down. Not necessarily, because oil could be down and then S&P could be up a lot. And if the S&P is up a lot, that's going to be positive. You've got oil down negative. It could cancel out and you could kind of end up somewhere in between and you don't really get the move that you're looking for. So you got to be a little bit, cautious, I guess, when looking at that. Caught JSPR. Yeah, that was a nuts. You're not going to get them. They're not always going to be that beautiful, but that was killer. King of Bosses, Happy New Year, everybody. I want to say thanks to my guy Thomas. Your videos help me a lot. I appreciate it, man. Hopefully these streams are good too. That's what it's all about. That's what it's all about. Added last position of TGT tight stop. Yeah, but TGT looks, it's been strong if I'm not mistaken today, right? It's up 1.86. So it stayed decently strong. Candle looks pretty decent, but you would want to see it, get rejected somewhere around here, ideally. We're getting close to a spot that you want to see it have a reaction reject. Oil looks messy. Yeah, oil's tough to trade. That's why oil and nat gas, to be honest, are a little tough. Not surprised. I missed the entry on natural gas for the short that I wanted to play off of it. Not super surprised, but wonkiness. Nat gas had a nice little channel today for a little bit that I was watching, but outside of that channel, it broke down below, then it got right back above it and fell into the channel. So it's kind of playing some games, but it had a nice channel though from the move down, the gap down. It had a nice, was respecting this for a good portion of time from like last night through now. Outside this one little dip below. Armed, how do you feel about the merger plays? I haven't been following, to be honest, the merger plays. I don't want to give too much. Well, I don't want to give a bad take on it because I have no idea. But let's see the chart. What's been working now that we've been seeing pretty clean. This doesn't look too bad, to be honest, from a chart perspective. Like if this thing can build up over $6, like this has maybe some range. There's a gap to fill all the way up here. Like there could be some range here. The thing that we've been looking and noticing that's been just like the clean, I want to say it hasn't been clean, but has been the easiest money in small caps right now in the low floats. It's looking for loading like this. Now, obviously, this was a move that came off of 3 big up days. It's looking for high relative volume that looks like this, but the stock chart continuing to go down like this. There'll be some wicks along the way, but some just kind of a general trend down, right? Sometimes with a big wick to the downside that gets bought up. That's telling you that there's someone buying that. A lot of stop losses are getting hit and whatnot. So we're looking for high relative volume and stocks sitting down towards their 52-week lows. Like that's where you want to be looking because that's what's working the best. That's how we hit JSPR. That's how you hit, LHDX, same thing. QTNT last week was like 100% or one day. Same thing there. There was even JNCE, Same exact thing. It was the same pattern, the same exact pattern. They're all going to have their own variations, but it's like the same general pattern that you're looking for. Stock down near new lows, high relative volume. Ideally, you can scan for 2 to 3 relative volume. And then, you look at those charts and you look for something, you try to, bid nice and small, and you bid nice and low, and you give it a couple of days. And if you can get a couple, shares realistically, a small size, then you can sit back and all of a sudden wake up one day like today where JSPR is up 400%, 500%. Boom. And you're avoiding the crowded names. You're avoiding the names that a lot of people have been watching the past couple of years, because RMED is a popular one that's run a couple of times. It's even run, from 2 up to 6 now in the past month. It's up a decent amount. Could it go more? Yeah. But I've just found that the cleaner, less headache, less downside is in the ones we've been just talking about. So that's what I'm seeing right now. Although I'm not like 100% only dialed into small caps. So I don't care for any of the momentum stuff behind it. That's just not my style of what I like to do. But the swings, though, that's a different story. MRL, favorite trade for oil, good risk reward with the contracts. Marathon oil, yeah. That's breaking down nicely too. That chart looks better than ExxonMobil. So that's a nice downside player instead of Exxon. I'm going to add that to the list too, because that one I like that a lot better. It's a lot better looking, in my opinion, than ExxonMobil, that chart. I'll put that right under my ExxonMobil just so I can have both of those guys on the list. Let's check back in on Apple. How is that doing? It's just kind of shipping and chopping away in this little range. Curious if we get any direction to the end of the day, if we get a pop or if we get a dump. Yeah, Apple has just been in this like $1 or so range like the past like couple hours after a pretty big move down. Trying to build higher lows. Trying to. But lower highs technically as well. So just waiting for something, I guess, if you're looking at something into the close. There you go, a little bit of a wedge building. Kyle's popping in AGFY. Tesla down more than Bitcoin. That's funny. Yeah, but I think, to be honest, the Tesla, no one wants to buy it, but I don't think it's necessarily a terrible nibble. Yeah, that's a nice looking chart. Now, it's not, yeah, I mean, look at that chart compared. And also these cheap, 30 cent, 50 cent, 10 cent plays have been the ones that have been popping off lately as well. Yeah, that's got some better volume. The problem is that they probably did an offering, though, and that's probably why you have this higher volume here from December on. It looks like, if I'm not mistaken, that's probably what happened. So that's going to bring with it larger volume on the charts. Ideally, you want some of these names or some of these stocks that don't have an offering or if they have an offering as of late, great, because then you have a gap to fill back to the upside, right? So you got this big gap to fill right up into here, which could be about 100% right here from where the stock is now, which is killer. But what I've been seeing that's working better is these kind of slow bleeders. Then the bleeding accelerates. No offering. They have a ton of cash. They don't need to do an offering. Ideally, these companies have cash that can sustain them the next, couple of quarters to the next couple of years, which I've been seeing a lot of them, at least have been saying in their latest earnings reports, that they can. And then at least that they're not going to do a random offering just right now where you could get caught in one of those like here. If they're out of cash, they're going to do an offering. And then you can wait for them to do it. And then they usually do the offerings after the spike. So wait for the spike, and then they do the offerings and get out. But that chart looks pretty good, though. Post-offering, you have better risk reward because they got cash now. So either they don't do an offering and they've got cash, or you wait for the offering and then, boom, now they've got cash. You at least have more comfort, and the chance of them doing another one are low. They could do it. I've seen it happen all the time. But generally speaking, they're not going to do a back-to-back offering unless they spike the stock and it goes up 50, 100%, and they get a ton of volume to do it. NVOS, yes, it does. The thing is, it popped off in pre-market today, if I recall. But keep an eye, though, because it doesn't mean that this thing is down 10%. This could be one to start perking up, right here. Today, it opened up here at 30 cents. This has something to They did an offering back here as well, and then it kept on bleeding. This is now on the high on the watch list because of how high that volume was today. If you look at the 5-minute chart, what you'll see is in pre-market from the close on Friday, it was down around 20 cents, and it was up around 37, 38. It was up like almost 100% at one point this morning, I believe, and then it just gave it all back, but it has a ton of volume on the way down now. So what I'm looking to see if any dip buyers that looked at this one this morning and added that dip get flushed out. So ideally a flush to even further lows in the next couple of days. That could be a decent buying opportunity, I think, on NVOS, because that volume is now popping off. And it's a pretty easy one to manipulate now, especially that you've got potential dip buyers that came in seeing it up a lot, thinking that it can go for more, who are probably bag holding it now. And then this thing can get sent a little bit further, hit a bunch more stops, and then have that, all you can eat buffet. Boom, load the shares cheap for the big money, and then run it at some point in the future and like truly run it instead of just run it, 10, 20 cents, where they can run this thing back up to fill this gap right here up towards like 60 cents instead of just running it to 40 cents or 35, whatever it was in pre-market. Run it to 60, fill that gap during the day, and just have one of those types of huge moves. So that's the type of look. So now it's on the list. It's high on the list now for NVOS because of that volume. I want to see how the next couple of days react. But just because that happens doesn't mean that it can't go lower. This thing could go from 18 cents down to 13 in the next couple of days, which you don't think is like a huge move. But percentage-wise, if you're going to load this thing with any size, right, from 18 down to 13, that's 25% you could be down, 26% you can be down, So be careful. But as anything from here further down gets me interested. Maybe you put a bid on there around 15 cents, 12 cents, 13 cents, something like that. We'll see where the next couple of days go. But I have only 2 small caps that I'm swinging at this point. I've been going with 3 at a time max. I only have 2 left because of the JSPR was up. Yeah, JSPR today. So now I'll have room to add one more by the end of the week is probably what I'm going to look to do. And add one before the end of the week. I'm not really in a rush to do so, but we'll see if something pops up that I really like, and I'll kind of have to weigh the options of which ones are available that I like that are on my list, and then which ones do I think have the highest probability based off what I've been seeing to run sooner rather than later. Because then ideally what you can do is come back and you get 1 or 2 of them that go, come back and then find the next one that hasn't gone yet, put some of that cash back into that one, and then kind of rinse and repeat until the plays don't work, until it stops working. Mesa 15% more today. Interesting. Very interesting. Log scale has been favored when shorting. Yeah, I've been in log. I've been using that a good bit. Apple is just trying to break out of this little wedge a little bit, but only got 25 minutes to do it. SPY is pushing up 381, so maybe it has a pop in it to close off the day. We'll see. Amazon's a prize. It's up 3% today. It's pretty solid. Meta's up 4%. Meta looks really strong. Enphase looks weak as hell. Enphase chart, check this out. I think we're going to be going down towards... Market stays weak or choppy. This is probably coming down towards 220. That's what I want to see. It's a gap. We had a gap up back in July. 220 or so is what I want to see on Enphase. It's still got about $30 to go. We'll see if it gets there. Check on that Mesa play again. Yeah, it's had a nice little rocket off the lows, man. Look at that. From $1 almost to $2, almost 100% off the lows. Pretty impressive. Pretty impressive. SPY's getting a nice little rally. Apple's trying to curl with that. Trying to. See if Apple can get over 125. And she's struggling. HZN comes to small caps being loaded. Let's check that out. HZN. There are some caveats though. Yes. Yes, indeed. I mean, this thing is, well, actually, no. What is this? Thing's up 300%. What's going on with this thing? Did they have like a split or something here today? Acquisition or something like that? I wonder what the news, we gotta check the news. Horizon Global. I remember seeing that this morning. They announced agreement with, check this out. Same thing though. HDN, right? They announced agreement with First Brands Group. All cash, tender offer. But the thing that's funny though, right? The thing is up 300% on like a buyout, right? Rumor or news. Look at what happened prior though. Like if you get rid of today's volume, right? I know it's tough to see. I kind of cut off today's volume. Look at this volume throughout the second half of December, all popping up. And look at this huge wick to the downside right here. This huge wick goes from like this day on the 28th of December, last Wednesday. The stock traded at 54 cents at the high and 30 cents at the low. That's insane range. That's 70% range intraday. Talk about manipulation. Like that's a perfect example of spotting that manipulation. If we happen to have spotted that prior, you take a small position, boom, you're up 300% off that news. Done. Game over. Like, all right, sell it. I'm out. Like, move on to the next one. Like that's killer. But it's all about spotting that ahead of time, which is tough to do. Unless you start, if you're not looking at volume, it's tough to do, but you got to look at volume, and relative volume is going to be your key. But that would have worked very nice too. Look at SPY. Yes, we can. SPY is trying to push up over 381. It's at VWAP right now on the 5 minute. The thing about SPY though, if we look back at the 1 year on this thing, what we're going to see is we're in this chop. We are just in chop. So right here is like 378 roughly is the level. There's been a couple wicks below, but 378 is like the low of the range. We've been getting buyers, pumping buyers in at that point pretty nicely. And then the top of the range is actually now closer to like 386 here. More so 383 for a lot of these candles, but really 386 on some of these bigger wicks, or these bigger spikes to the upside. So we're kind of in this like $5 to $8 range on SPY until we break out, right? So ideally, if we start to break down below 378, right, we're probably looking at a decent move down. And if we get up over 386, today's high, and then, go back 2 weeks, the highs of Wednesday, we're probably pushing up into the 390s, and then that would maybe set the stage for a rejection up into 390 to 395. But we're just in this chop for now, which is like a pain, but we're waiting on, something. And I think tomorrow might be a good start in getting out of this range. FOMC minutes, some job openings, quit numbers, ISM manufacturing, some decent stuff coming out tomorrow. So by the end of the day tomorrow, we should have a pretty decent feel for where the market at least wants to go. And we'll see if that ends up holding. But that's the look going into tomorrow on SPY as it sits here right in the middle of pretty much right in the middle of the range it's been in. Crazy 70% range. Oh yeah, it probably didn't have much volume on HDN, right? Let's see. And had to be some volume on the 5 minute. Let's check this out. 5 minute chart on this thing back on that day where it had that crazy range. Yeah, it wasn't much volume. You're talking about a couple hundred shares being traded, 600 shares, 600 there, that 100 there, 300 there. It was very minimal, volume. A little bit of a push into the close. Not much. Not much got traded last week, but on a relative scale, you got to be looking at the relative scale. And that was your answer. WBD is going to be a banger. Let's take a look. WBD. Warner Bros. Interesting how that thing's been getting crushed the past 2 years. Yeah. I'm surprised that that's down that low. That's pretty impressive. Only way to find those poppers is to scan for stocks at low, stochastic on the daily. Yep, and then relative volume has been what's been key. Oversold, high relative volume. There's a million out there. There really is. That's the thing. In the past, I would be getting the FOMO of like, oh man, I missed, because I had on the list, I even had, LHDX today. I had it on my list. It was right there. Could have been an ad that I would have this week or whatever. But I don't care because there's a million other ones where that came from. I got a list of like 10 as it is now, and I'm just scratching I was only looking through biotechs. I'm sure you can go to other sectors and find a million out there as well. So that's what's cool about it. Everyone forgot about it. It looks really good. Yeah, that chart, man, this thing got destroyed. But this was back when we had that crazy liquidation, right? Back in 2021, right here. It was part of that crazy liquidation. But it just got absolutely annihilated since then. And I agree that no one even knows this exists. I feel like everyone's forgotten about this thing. It's got some decent volume as well, though. But it's starting to pull up. But that would be a juicy one if it got going to the upside. Micron pretty strong. TTCF. Man, this is a funny one too because this is one that's gotten absolutely annihilated. That's got some better action as of late. Jeez. November, this thing just fell off a cliff in November. I guess that's probably like part of this maybe is tax loss harvesting. I don't know. And there's a big guy on YouTube who has been like a very, very big proponent of this stock over the course of the past like couple of years. I don't know if he's still in it. I have no idea. I haven't watched a stock picking YouTube video. I can't even say in how long because I don't really care about that stuff anymore. But this thing has gotten destroyed. I remember back when it was up, 10 plus. Talk about this thing in the ones. Wouldn't be surprised if this was a pretty decent tax loss harvest, for somebody or multiple people along the way down the past few months. Starting to get some better action though now. Micron. I forgot to put Micron. Micron is up 1%. Interesting. I have an alert. We got an alert there for a downside because if that breaks down under that 48 area, that does not look great. But it's holding on for dear life right now. Holding that level. Until it doesn't. But it's holding it for now. Almost looks like a bear flag too setting up. The next leg down. Tattooed chef and gets start selling meat to boost the That's a good one. That is a good one. I've seen them. I was just in Target the other day and I was looking and I saw that it reminded me of the stock. I didn't really think much of it. I didn't check the price for the stock, but I saw their stuff in the freezer aisle. Some frozen stuff, frozen pizzas and whatever they got. I have no idea if it would be good. I just kind of feel sketched out about trying it because I can't imagine it's going to be that good, but who knows? WB is down so much because the big money was only invested, started getting liquidated, hedge fund got margin called. Yeah, that's what it was, that big liquidation. Back there, they got margin called, and that thing got destroyed, and then it's just been trending down since. That's where you got to be like, I was looking at people talking about like, oh yeah, like investing in stuff. It's not really about finding the best companies. It's more so about finding the inefficiencies in pricing. And that could be a situation where like it won't be like that forever where people forget about these things. But maybe there's an inefficiency there and the thing has a 200% rally in the next couple of years or the next 6 to 12 months, who knows, and that's a killer trade or investment for someone to take advantage of. Might take a look at that though soon for maybe toss that one in the Robinhood portfolio and just leave it for a bit. Sell some covered calls on it. I hedged the portfolio with a AGQ put out for January expiration in a couple weeks, just in case we have DXY breaking out here, in case DXY pops off. If DXY goes up and breaks out over this, which looks strong today, if it gets up over 104.85, 105, then I'm concerned about that. Actually, I got to get rid of this UUP position, which was essentially a dud. It wasn't really bad, just was a dud. I had like had a couple contracts of that. It didn't really move much today, so I'm just going to dump that as it is. take my small loss and move on to the next one. Forgot about that thing because I had that from this morning and I just like kind of forgot about it because I had the alert set for my stop loss on it, but I'm not holding that overnight because who knows what's going to happen. It looks pretty strong, so I'm just going to leave it alone. Let it do whatever it's going to do overnight. Come back and we'll fight it again tomorrow if we wanted to, but I probably won't unless we get a break to the upside or downside on this. Which really we're looking for under 103.40 and over 104.85 or really 105 ideally on DXY to play off of that, to play off the dollar strength / weakness. So got out of that, frees up that few bucks. And today was pretty boring to me. After that JSPR, I kind of just like had a couple choppy, not stupid things, just like was on the wrong side of a couple things and just chopped a little bit back and was like, boring. Not much going on for at least me today. Because again, not really good direction, especially after I saw SPY just fall off the open. I'm like, okay, here we go. We're going to be in the same range. No direction here. I prefer to have direction before I start playing anything with size. In a perfect world. Let's check back in on Nat Gas. How's Nat Gas doing right now? Let's check in oil and Nat Gas. Yeah, so I hedge the AGQ with puts. I have AGQ long as a position in the portfolio, but I hedge it with puts. I also sell covered calls against it, but I hedge it with puts just in case DXY breaks out. But if it does, then it's going to be, I'll lock in a few bucks in those puts and then I'll have, minimize the downside. So here's oil. Not looking great, down 4% today. Trying to bounce back a little bit here into the close of market. And Nat Gas is trying to come back up into play. At least it's in back into this channel. Had the undercut of the channel, undercut those lows. Curious to see how this reacts the next couple of sessions. Ideally, I think we're looking for a gap fill back up. If it gets rejected there, like in the 425 to 435 range, that could be a reshort at some point in the coming days and weeks. Keep an eye on it, but not like super high conviction or anything on Nat Gas. We'll watch. Did I call that breakout DXY last night? The pivot that was setting up. Yeah, it was interesting because it was right at that low for a breakdown and then just pop right up. It still like really needs to go further for a continuation breakout, I think, but it held that low and it just like, oop. That's why we don't want to take that's why you don't want to necessarily take stuff outside of hedges, I think, before a breakdown or breakout, right? If you're going to go long at a resistance, if you went short at support last night on DXY or whatever, you're down pretty decently because that thing popped right up this, overnight this morning. So it's like, oh, that sucks. But if you're going to hedge, like I'm already long AGQ, and if the dollar gets strong, gold and silver are going to pull back. And silver here's the chart for silver. It doesn't look great because of today's wick. Like this wick right here looks like kind of nasty. I look at that wick. I'm like, oh, that doesn't look good on silver's chart right here. Went to a new relative high from the past like 6 to 12 months, and then it just got hit pretty hard with sellers at that. So I would think this is probably going to be maybe doing something like this into this zone at a minimum, drop a few bucks off of silver for a pullback. It's done pretty well the past, 3-4 months, man. It's been pretty good. It's better than I thought it was going to do, but pullbacks. Tag what you saw on Twitter. Oh, check it out. I'll pull it up. Let's see. Oh yeah. No, that looks good. That looking back, look at that. That makes a lot of sense right there. That breakdown is going to be juicy at some point, when we get it below that 103.40 area. Of course, it'll change as time goes on, potentially if this trend continues and it holds up for a couple more weeks. But yeah, that's nice. That is nice. Like to scale into positions with very small percentages and add if it starts playing out. That makes sense. It makes a lot of sense. I think I'd wait for the pullback. Otherwise, I might have chased that opening rally on SPY. That's what it's like. I think also another factor too, was start of a new year, SPY looks decent, looks like it's gapping up. We're like, oh, here we go. It looks strong at the open. Like, oh, maybe we're going to get direction. Here we go. Just waited for a new year. Now I got direction. And then it was like, oh, get effed. Like, and no. And there it goes. So it kind of sucks, but that's been this environment for now. And I think I was seeing some people, I was seeing some stuff on, I forget where it was. People are like, I think this year is going to just be a completely range-bound year, and it's going to be one of the most difficult environments to trade. I'm sure it could be, but I'm sure there'll be plenty of opportunities even in a range-bound environment. Because at some point you start to recognize the range, and at some point you start taking advantage. Of course, when if you can recognize a range fairly early, obviously that's much better. But it's always easy to look at it after the fact, hindsight. Everyone hit the like. Yes. Run up the likes. I don't ask for that enough. You guys wouldn't mind. No one needs to know. The thing at the like button too is that no one knows that you're hitting that. It's just you. I get to see a number on the back end, which I don't even check, of how many likes or dislikes. They took away the dislike button, I think, or whatever, at least to some degree. But I can see the numbers in the back end. I can't say who though. Be funny if I could see that. That would be hilarious. I forgot to mention too. I figure I might as well. I was just looking at December of 2022. For those who are like interested in like the ad revenue side of things, I got my numbers for this channel's ad revenue. It was $420.01. If you're interested in if you're curious how much it makes, it does not make a lot of money. That's not like you can't really do too much with that these days. So it's not like I'm sitting here trying to make money off of this stuff and, squeeze out as much as I can off of views. Wouldn't be doing that. I wouldn't be hanging out on the streams like this if I was, right? I'm sure there's better things I can do with my time to make more money, but I enjoy this stuff. And so that's how we do it. That's what it's all about. I think it's safe to say that Santa Claus is not coming. No one came. The Grinch didn't come. Santa Claus didn't come. No one came. It was like a boring-ass Christmas time. So, it's a shame. We wanted something, but we just didn't get it. Hopefully tomorrow we get better direction and there's enough to play off of after that. But we will see. Took away the count on dislikes because I would sit for hours and just have fun. Yeah, and then also I think it was probably had to do with some sort of mental health thing too, I'm sure. People were seeing too many dislikes or, was throwing off, I don't know, stuff on videos. I'm sure that has an effect. I don't really care. I think it's good and it's useful stuff because if you look at it like that, hey, no one likes this. They're hitting the dislike button. That's probably something I got to change or I did something wrong, if that's what people were taking away from the videos. That's what it's about. Exactly. Nasty Catalysts on TGT. I'll be watching it. We'll keep an eye. I'm hoping that I still have this SVIX. Checking the VIX. I still have the SVIX. Here's VIX. It popped up. It's actually over that level, but my SVIX is still up 5%. I'm going to still hold it versus I think it was 1350 that I'm risking on SVIX. So that's the level that I'm going to risk. But the VIX popped a little bit today for sure, which is notable. We'll see if it can hold that. It seems like all these wicks get sold off on the VIX. We'll see. Office Depot rally today. Retail's rallying. Yeah, it seems like a little bit. Play ACET, looking for a gap to 20. Yeah, maybe. I mean, I'm not personally a massive fan of this type of setup personally, but that gap is interesting. You got to be looking at this type of play probably is more so you got to be looking for catalysts and you don't want to be looking at fundamentals of this specific company, I would think. or you're just going to risk it off of this level. And if you're going to play the long, like that's fine. I would ideally want to make sure I have a good reasoning why, I'm playing this long. But if I get in here and I have a stop loss under that 755 low and I'm targeting that gap fill, I mean, that's a incredible risk reward trade. That really is. Have a good day. Peace, man. We'll see you tomorrow. I'll do another stream tomorrow afternoon because I have some time. But we'll do another stream tomorrow afternoon and hang out. Hopefully we'll get the, it'll be just after the Fed minutes. FOMC minutes come out, so we'll have a direction by then. Hopefully. We shall see. Put call ratios, nothing I really care too much, but they're at 0.95, still relatively high. I think Wednesday is the day that I care the least on the put call ratios, but based off of what we've been seeing as of late. So we'll see. Check on those calls that I had on the AGQ puts. AGQ puts. I bought them at 85 cents. They're up to 88. It's up 3.5%. Not much. Need a DXY breakout for that to play, for that to pay, ideally. Two-year chart on ALLK. Yeah, that does look massive. And that's got some good strength as of late, too. Those are some nice, that's a nice trend it's got going on there. These are interesting stocks because, in my view, it's like you got to kind of know you got to be more of a fundamental player off of these. That's just kind of my take on it. Obviously, anything can happen, but I'd like to see, a lot more. I want to be diving deeper into the earnings reports, statements, and stuff like that. And then knowing the catalysts upcoming and whatnot. The risks that you play with some of these, though, is that, if you are playing these things, if they have bad data or they scrap a trial or something like that, these things can get crushed. And that's what really causes a lot of these gap downs on a lot of these names. So you have to really kind of know what you're holding, especially if you're going to hold these things longer term. That's why, for me, to be honest, I just think that from a trading perspective, to have the least amount of emotion, the least amount of worry or care on these things, I just like you have a simple strategy that you follow or a simple kind of guideline that you follow, and that's it. I look for high relative volume on stocks at 52-week lows that have cash, that have catalysts, and, I take a position and I cut it at 25% or I take profits on the spike. I think that's a pretty straightforward way. That's just my kind of stance on it, but these are good because you can have, from 5 baggers, you can have some big moves in some of these guys if you catch these things, low. PDSB is one of those it's kind of the same thing. PDSB, I recall looking at this one a couple months back or this past year or something like that. Like, I like PDSB from what I saw, research-wise. Double bottom right here, I missed that. And I wasn't paying attention to PDSB in September, But the thing went from that period to just a couple of days, from just to Friday, 375%. Not off of one spike, off of like a 3-month move, which is pretty cool. So we will see. Make smarter decisions this year. I think there's absolutely no reason, especially in this space. Everyone has a different pace of learning, I think, for sure. But there's no reason why you can't go from, I don't want to say from 0 to 100, but there's no reason why you can't turn things around in a very, very, very relatively short period of time. When you look back in the moment, it's like, oh my gosh, I'm not getting what I want today. When you look back on things, what's 3 months? When you look back on the past year, if you made some good strides the past 3 months or you learned a lot in the past 3 months, that's going to be, key in your future progression. I mean, that's what it's all about. That is what it's all about. So today my P&L ends up going from up a couple hundred off of that one play to only up like $100 because I chopped my stupid ass back up to finish it off. Still finished slightly green, but had opportunity to kind of really kind of turn it on. And I'm not surprised because I'm just looking at SPY right now and I'm like, yeah, well, it makes some sense. Just, it's been choppy. I've been bad about this. So sizing, there's been no sizing up. There's none of that stuff yet until we have better direction, until I got a good feel for things, which I don't feel like I have a great feel right now. And the market's been chopping for weeks. So not really a reason to size up at all. But I think for sure, my plan, at least for this year, is going to be to start sizing up as we kind of confirm. I want to see another month or so. If January goes through and I have a similar month to like last month, which to be honest, December, I saw a lot of people, who had really struggled in December, who had done very, very well the past year. When I was seeing, and I'm like, everyone has their own, experience and stuff. I'm like, I did pretty well for December. If I can do that again and replicate that in January, whether the market goes up or down, doesn't really matter. If I replicate that, then I'll start looking to size up, probably up in the sizing, maybe doubling the size on the positions on day trades and stuff into February and March. And we'll see how things are playing out by then and where the markets are headed. But that's the plan. I think the reality is that if we're kind of just chopping around and we're not really making huge moves up or down and we're kind of in the same environment as last year finished off, it's great. You can still stack the small wins. The better opportunities would be, whenever this comes, would be when we start looking at the risk on environment heating up again. And we start looking at all of these like small to mid cap companies, like the Upstarts, the Affirms, the Coinbases. I think Coinbase is a bigger market cap than that, but whatever. All those types of names, like the Cathie Wood names, like all those ones that have been beaten down, the higher quality of those that will have these bigger moves off of their lows. We're talking, 100, 200% off their lows, still coming back nowhere near their highs, like nowhere close. But that type of move, when the risk on environment comes back, whether that's late this year, early this year, next year, that's when I think you can really kind of hit the pedal hard or, slam on the gas. Because when you start getting huge moves, the upside, is essentially on a squeeze is unlimited. Now, of course, we're not talking about AMC type crap. No, we're talking about like legitimate squeezes for these names that have been beaten down for so long that all of a sudden come surging back. And, taking a chunk of that surge is all you're looking to do across a couple of those names. And that's where I think you can strike pretty substantially. And that's where I think the compounding can hit hard and you can start making some big strides. So in the meantime, until we get to an environment like that, cautiously optimistic, just let it do its thing. If we go to new lows, we go to new lows, whatever it is, what it is. Just kind of staying alive and, building the quality skills or building the right, repeating the right things, cutting out the crap, cutting off the cancerous, habits, and then repeating the right habits and kind of building off of that into the end of the year or into however long it takes to get to that environment. And then when that environment comes back, because those cycles are going to repeat, every couple of years or whatever, these cycles will rinse and repeat. And we're looking, I just saw a recent tweet from Michael Burry. Let's see if I can find it. Let's see if I can find him. Let's see if I can find his account. Yeah, here he is. Check it out. Here's what he tweeted, I think, a couple days ago. That was funny. But it just kind of, not that you necessarily have to follow this guy, and who cares if he's right or not. I think the message of this tweet is what I'm really kind of going at. It's just the cyclical nature of this. Inflation peaked, but it's not the last peak of this cycle. We're likely to see lower CPI, possibly negative, in the second half of 2023. If that happens, that's going to freak a ton of people out. That's going to freak the Fed out. And if that happens, okay, U.S. is going to be in recession. We're going to see potentially deflation. And the Fed's going to have to cut rates and the government will have to stimulate, because if the job market gets hit and that happens, right, the Fed's going to cut and they're going to stimulate. What happens if the Fed cuts rates and they stimulate again? We'll have more inflation down the road. It's just repeating the cycle right down the road. So as we kind of get a better feel for things, right, as time goes on and you live through more of these cycles, you'll start to understand that you have to be nimble. And as time goes on, you can kind of move to different things, and certain things will work better than other things. And it's kind of rinse and repeat almost. It's not going to be perfect. Not everything's the exact same. No cycle is the exact same, but there's a lot of similarities and there are things that we can build off of. And so that's, I think, what it's all about. So keep that in mind. If that what happens, what that means is that we're probably going to could see market go lower. But if the Fed was to cut rates and stimulate again, guess what? Those growth stocks and those companies, as rates come down again, will start to be more attractive at lower prices. And so the quality names there will start to be more attractive. They'll have nice runs, and that could happen for a year, 2 years, 3 years, depending on how long the cycles go. There's no one that says, hey, the cycle must be 2 months or 18 months or 20 months. Like, it could go on longer, a little bit shorter. It depends, right? What happens macroeconomically, across geopolitically, that so many things that happen. There's a lot of things that can impact these different cycles. But if this happens, right, it's kind of like the same rinse and repeat until you get to like that breaking point where like the system just can't handle this again. And let's say the government does that. If it happens, we've just printed more money. We've just built up a higher number in terms of our debt. If rates go back up again, that's not good. At some point, you're going to have a big collapse. At some point, you get these big, crushing blows like we had in 2008 for the real estate market. At some point, it could happen in the stock market. It can happen for different reasons at different times. But that's kind of the nature of how these cycles play out. And at some point, we're going to get it. The perma bears are looking for like that to happen right now and the end of the world to happen now. It will happen at some point. We just don't know. And I'm not going to sit here and try to bet on when that's going to happen because we just don't know. And it's not something that you can replicate with time in terms of being able to, exactly time that, right? Consistently throughout multiple cycles, because there's no cycle's the same. So if that's what happens, then cool. I mean, it's another cycle that we have now the script of this past cycle to play off of and, to go for the next one. So cool. That's what I'm hoping for is we keep getting nice cyclical moves and they're somewhat predictable. They're not going to be very easy to predict, but they're somewhat predictable. And so whether you're playing stocks and bonds or whatever, great. And so I think that this year could be an amazing year if things do go lower to pick up on those stocks. Like, for example, Tesla, as it's a hot topic right now. If times change and Tesla holds strong and, they are in a good position and whatnot, and you believe in them, and, we get through this recession and whatnot, and then the Fed starts printing again, the government prints and stimulates again. And then guess what? In that environment, for a couple of years, you'll have the next bull run, and the thing might go to way, way higher highs, at that point, just as a lot of other stocks might, And so I think taking advantage of quality companies and taking advantage of like even just dividend stocks or just investing in the overall market, index funds right now, just stack it as we go lower and you can slowly roll money in. Obviously, if we have one of those big washouts with big crisis events, right? Like an '08, if we have that happen again and we do go a lot lower, yeah, it sucks. We couldn't time that necessarily. We know it's going to happen at some point. You can't time the exact week, month, or year. So maybe you weren't prepared, but hey, if you're investing in quality stuff that's not going to go away, if you're investing in the risk on assets, the risky stocks that could get crushed in a recession and those companies could go poof, right? That's where no one invests in those companies when we go into this tightening cycle. And that's why they get crushed. But if you're investing in the quality stuff, especially if Apple gets hit really hard, if Apple's chart breaks down, which it's doing right now, if that gets hit hard the next couple of months, I think there's potentially some good opportunities if we keep playing this game. And when the tide turns and let's say a bottom comes in, wherever that bottom is going to be, there'll be some great rallies and some great runs off of those lows to take advantage of. But the problem is if you're not in the game for that, you're going to miss out. You'll come back in chasing at the highs before we hit the peak of the next cycle, and then we dump back off. Probably how a lot of people came in with AMC and stuff. If you got in on AMC, you got in 2021, you started putting your money in the market, you saw AMC had its pump, and then it started to fall back off. If you started investing into stocks in general, you bought the highs, you bought the top. Now you're getting crushed. Now you're getting destroyed, and you're like, screw this, I'm going to get out. Maybe the bottom's in. Maybe the bottom's next year. Maybe it's like relatively soon. You're going to miss that, and you're going to come back in and chase it higher. So staying invested the whole time, as everyone is always, I'm sure familiar with the investing approach, the long-term approach. That's what it's about. And then I think when we have these cycles, that's where we can take advantage of like the short-term stuff and play off the cycles a lot more. But that's like my big rant of my take on everything right now. So we'll see. We will see how things play out. Realistically, a watch list for specific thing like high short float. Yeah, we can definitely set one up. I think we can put one in the maybe in the Discord or something. And we can have a kind of like a, well, actually, there's a small cap channel. I think we should just be funneling names or companies into that channel on the Discord. Tossing ideas or tossing lists into there. Green Day is a good day. It is. I can't complain. If I can do good the first half of the year, I'll consider sizing it more. I think that's a good strategy. It's a good plan. Got 100 shares of AMC at 4. You know what? It's funny because AMC is pretty much back to where it was like 2 years ago, right? Yeah, it's under $4 now. It had a pop up to almost $4.50, then it fell off. To be honest, it's not a terrible. If it starts to break down under 4, really under 3, there's some 325 support. This could get ugly, but it's pretty oversold if you think about it. I don't want to start saying AMC is a good buy, but like it probably is going to get pumped at some point, right? The January effect maybe at some point. Better to miss a trade than chase something up and 100%. Probably the strongest day in small caps since early August. JSPR, LHGX. You don't often see that. The funny thing about those two is that I was in JSPR like last week, and then LHGX was like pretty high on the watch list. Almost had both on the same. Almost had two 500%ers in the same day. It would have been insane. I only ever had something like that. I've had a 500%. I've had some pretty big percentage gainers off of a day. JSPR honestly could be one of the larger percentage gainers. I was not sized very, very heavily at all. There have been times, there was a BCTX day a few years back, if I recall correctly. Maybe it was back in May of 2021 or June of 2021. I think that's when it was. That day, or maybe it was prior to that. I forget exactly when it was, but I was sized pretty substantially into BCTX, and it did like 50 to 100%. And so that was technically my biggest small cap swing of all time on this account, I think. But percentage wise in a day, JSPR is number one. I think it's got to be up there, number one. LHGX, it had high relative volume at new lows. It was looking to be. Let's take a look. I'll pull up the chart. It was on my list. I had it on the list this past like 2 weeks. Funny enough. I was looking at the daily, and let's see. If you get rid of today's volume and today's action, you will see that we had essentially really nice volume coming in as it was flushing to new lows, and then we started to even get a couple really nasty candles where it had pretty big range, and that has been a pretty big signal, at least as of late. There's been a couple names that have been similar that I've seen pop off of that. And then I think I was looking up the cash position and whatnot. And I looked them up, and it popped up on a scan. And I was looking for these, sub $1 names, sub 50-cent names that were super high relative volume, and that's what got it on my radar. So, kind of random, but also, it's kind of fitting the mold of what's been kind of working. There's a bunch of other ones that are out there that I think still look decent. I think we're looking at Bolt. Someone mentioned Bolt on a recent stream. Bolt's got some really high volume as of late. Some wonkiness, a couple big wicks to the downside. Some stops potentially being hit right here, but they're getting bought up with some high relative volume on Bolt. NXTC, similar situation where it has just went to new lows a few weeks ago, or a couple days ago really, on some crazy high volume, relative volume as of late. FNCH, is this another one? FNCH? Yeah, FNCH is another one too. Look at this volume. Crazy, crazy high volume on FNCH. QTNT, I think, is already gone. QTNT already went last week or whatever. WISA, not great. ACHL, I think, is another one. No, it's already going. Look at ACHL. This one popped on our list a few weeks back as we were noticing it on the way down, getting some volume. It started to hold around the 75-cent level, 80-cent level with just increasing volume. And now it's gone from 75 up to 105. I'm not going to chase it, but could still have a lot more to go for whatever reason. That's a good chunk of the list right there. There's a couple other ones, but that's a pretty good chunk of the list. Seems like they're targeting the cheapest stocks trading on a major exchange. Sub 50 cents going in the day. Had PRs, didn't seem to just yeah, no, that it didn't seem to, yeah, the PRs, sure, but they had some more, there was more behind that than the PRs. It seemed like. Optimistic on this year no matter what the hell the market does. 100%. Day by day, week by week, month by month. NUZE today, sub 10 before the move. Big winner today. Nice. Nice. That was a pop. That was a big pop. That was a really big pop. Kind of the same deal, though, on this thing as, believe it or not, right? You kind of had some pretty high relative volume the past like couple of weeks, really. Some loads, some of these big spikes, some loads. And in the past, since the 20th, it got a lot more as it went down to a new low. Same kind of idea. Yeah, same kind of, I've been looking at the cheaper stocks, but same kind of idea, you know? And this thing just popped off today's low to high, right? This thing went about 100%. Crazy. All right, guys, with that said, I'm going to wrap things up. I do got a dip. I'm going to try to get to the gym at some point today. Weather's been pretty freaking nice here, man. It's been 70, 73, some sun in the sky. Just sucks that the days are kind of short, but I'll take that. I'll take it. I'll take it to the bank. So today was, to be honest, as interesting as it started. I chopped some of it back and kind of gave back some of that, which is like unfortunate, but it is what it is. We wake up tomorrow. I'm looking for a third small cap to put on the swing list. I'll be scanning through some other ones and the ones that I already looked through right there, the ones we already have, to potentially add a third one before the end of the week. But I've got two for now that I'll leave on. They're actually up a little bit. One of them's up 25%. It's pretty cool. But yeah, I'm just going to leave those on for now, and that's it. I'm watching natural gas. I think it's one of the bigger watches for me to see how this kind of reacts going into the end of the rest of the week. Really big gap down and flush today. I'm curious. Some buyers came into the close. I'm curious to see if this was to hold up. I want to see how natural gas handles the next couple of sessions. If it gets back up over 425 into this zone for a possible short, but we shall see. 80 degrees in Florida. My girlfriend just came back from Florida. She was there with family this past couple of days. The pools, the beach. I had a nice run outside a couple of days ago, back on Saturday. It was like 78 here. Beautiful, man. Can't complain about the weather here. It was kind of rain the past couple of weeks. It was kind of rainy, cloudy, but it's been pretty good. So I'll take it. I'll take that. With that said, I'm going to wrap things up. We'll do a stream for tomorrow afternoon for Power Hour again. We will have the FOMC minutes out at 2 p.m. Eastern time, so keep an eye on that. I think we'll jump on for Power Hour, so we'll be coming on just after that. That's when I'll be able to get around to it. And we'll see if we get direction at that point. So with that said, thanks so much for watching, guys. Thumbs up button. Peace out. Have a great rest of your day.